Ross Stores is in the news today after delivering a very strong earnings report, but the stock's reaction is giving traders something important to watch. Ross reported second quarter sales of roughly $6.26 billion, up 13% year over year, while comparable store sales jumped an impressive 10%. Earnings came in at $2.66 per share, helped by about 60 cents from tariff refunds, and the company also raised its full-year earnings outlook to $8.61 to $8.77 per share. That combination initially sent ROST up around 8 to 9% in pre-market trading. But here's where the chart becomes interesting. The stock was trading close to $249 before the open. But after the bell, buyers couldn't hold those levels. ROST opened around $244 and quickly pulled back toward the $238 area. That matters. A strong earnings report can attract buyers, but when a stock gaps higher and immediately gives back a large portion of that move, it tells us there is still significant supply overhead. A trader knows the level they're watching, what confirms the setup, and exactly what proves them wrong before putting money at risk. If you want my free guide on what separates a trader from a gambler, I've linked it below. Now look at the bigger picture. ROST has had an extremely strong run, climbing from roughly $160 late last year to a recent high near $257. So the primary trend has been higher, but after touching $257, the stock corrected toward $228, and now earnings have created the next major decision point. The first level I'm watching is $244 to $245. If ROST can reclaim that area and hold above it, the next test becomes roughly $250, followed by the major high around $257. A clean breakout above $257, with strong volume, would put the stock into new high territory and could signal that the larger advance is ready to continue. But I wouldn't ignore the downside. The $228 to $230 area is now critical support. If this earnings bounce fails and ROST breaks below $228 on strong volume, that would tell us sellers are taking control again. Below there, I'd watch approximately $220, followed by the larger $208 to $212 zone. So despite the impressive earnings numbers, I wouldn't chase the headline. Watch the price. Reclaim $245 and hold it. Momentum starts strengthening. Break $257. That would be major confirmation. But if this gap continues fading and $228 fails, the chart is telling us something very different. The earnings were strong. Now ROST Stores has to prove that the market is willing to pay higher prices.